Welcome back. And with me, Darren Marble, the CEO of Issuance, and also Arthur Bavalis, the Family Office Insights. Welcome.
Thank you.
So Darren, let's start with Issuance. And this is a new company you've created. Tell me what it is that Issuance does.
We're building a modern investment bank for digital securities issuers. We believe that digital securities are the next mega trend in capital markets. And our goal is to be the leading investment bank for this industry. And ultimately to help entrepreneurs raise capital faster, easier, and more efficiently.
Okay, so tell me, what are digital assets? What would that include?
So digital securities are digital assets that are compliant with federal securities laws and run on a blockchain.
Okay.
So we're taking blockchain technology and kind of merging it with traditional capital markets infrastructure. If we look back in the last year or two, it's clear now that all of these ICOs, or initial coin offerings, were in essence selling unregistered securities. So digital securities are really a compliant alternative to an ICO. And we're excited to be at the forefront of this new space.
So these would be tokens in particular companies, or, I mean, would you also sell assets? And I know there's been some real estate, there's even been artwork that's been tokenized. Would it encompass all of that? Absolutely.
So if you look at global equity markets, debt markets, the basic concept here is that you are able to take an illiquid asset, such as a building, a condominium in Manhattan, tokenize it, the entire capital stack top to bottom, and then have those security tokens, or what I call digital securities, trade on secondary markets like an ATS or an exchange, such as T0, thereby providing liquidity to employees, investors, and bringing new investors into the mix. Mm-hmm. So liquidity is really the biggest driver of this industry. There's also additional benefits, automated compliance, lockups, et cetera. And we think it's going to be just a tremendous market. So let's say that I am interested in investing in some of these things. Do I take $10,000, set up an account with you? Like, what's the process and how does this work? So it depends on how the issuer conducts the offering. Some of our clients are selling traditional equity or debt instruments that they will then tokenize after they raise. In other cases, clients are actually selling digital securities. And to do that, they need to work with a tokenization platform to take the capital interest in the company and effectively tokenize those interests. So how you invest $10,000 into a particular deal really depends on the issuer. At the moment, most companies we're working with are preferring to sell traditional equity or debt, which allows them to present a more familiar term sheet to investors, thereby widening the investor pool. Okay. And then tokenizing that company after they close their round and then proceeding to list to a secondary trading venue.
Okay. So do you eliminate the need for a broker, like a Charles Schwab or something like that?
No. In fact, Issuance is in the process of partnering with a broker-dealer. So we think that this whole market is going regulated. Today, we're a technology and marketing company. We sell traditional marketing and advisory engagements into the market. It's a fee-for-service model. Tomorrow, we'll be partnering with a broker-dealer that allows us to capture success fees. So there are an increasing number of regulated players entering this space. Whether or not the larger incumbents become leaders, or it's more startups that take the lead, is to be seen. But ultimately what I believe is that 50 years from now, the largest investment banks globally are going to be companies that are startups today that have digital securities technology at the core of their business that fold in traditional capital market solutions.
Would you argue that having, for example, a real estate, a building, let's just use the example of a high-rise in Manhattan, that this is a method of owning an incremental interest in something that you couldn't otherwise buy yourself, for example? And so if I wanted to be an investor, I could buy into a crowdfunding platform that bought part of a high-rise, which we've seen in New York. And this method is similar, except that now you have liquidity as opposed to otherwise you wouldn't have liquidity. I'm answering the question, but is that seemingly, like if I want to own an incremental interest in something, does this make sense for that?
Absolutely. Whether it's a building or a piece of art, it gives the issuer the ability to fractionalize the asset. So here's an interesting example. One of our clients is a NASDAQ listed biotech company, and they're a 300 million market cap business, and they have 16 cancer treatment drugs in development. Today, if investors want access to this company, their option is to buy the common shares through a brokerage account. And when they buy those shares, they're getting exposure to all 16 drugs in development. What this company's done is they've taken their lead cancer treatment drug, which is one of those 16 assets, and they're tokenizing it. So this allows investors to make a bet on an individual drug. And conversely, you can imagine with a REIT, you get exposure to a portfolio of real estate assets. But with tokenization, you could, buy an apartment in Brooklyn, a condo in Manhattan, long, short, et cetera. It really opens up the opportunity for fractionalization, and I think real estate is a tremendous use case for tokenization.
The thing that I think of immediately with the real estate is the pushback from the lender, right? And maybe they just need to be conditioned to understand. So if traditionally you're buying a building, they want to have a perfected interest in the asset, but if you chop up the capital stack and have different tokenization of that, how does the lender have a perfected interest with an encumbrance against all that?
So I think, you make a good point, and ultimately there's a huge need for education in this industry. While we and others believe that real estate is a great use case, there is resistance. You've got a number of professionals and investors, syndicators that have made a lot of money successfully in real estate without tokenization. So now they're saying, well, why do we need this extra step? What's the value? So I think one of the themes for 2019 really is education, and providing education to people in different industries about the value proposition of tokenization and what they have to gain from it. Liquidity, automated compliance, reduced issuance fees, the ability to attract and onboard international investors. There's a number of benefits that I think in aggregate make tokenization a very compelling decision point for a lender or equity investor in real estate. And some of the momentum in this industry really is around real estate and tokenization projects. So I think in the next few months and really few years, we're going to see that education take place and more of those lenders kind of being informed about the value prop and why they should participate.
Would that reduce the lender's risk, though, if it was spread out over several people who owned incremental parts of a building or any piece of real estate?
I think so. I think one of the things that tokenization does is it allows issuers to attract international investors and create a wider pool of liquidity, which I think benefits everyone involved. And we're seeing a number of tokenization projects happen in Brooklyn, in Manhattan, on Indiegogo. They just did the Aspen St. Regis deal, which raised $18 million using the securitized DS protocol. So I think it's definitely one of the hot sectors. Others are tokenized venture funds. So for instance, traditionally LPs put money into a venture fund and they're locked up for 7 to 10 years. They check in and see how the portfolio did. The idea that an LP can now be liquid in 6 months or 12 months and sell a portion or all of their position, I think is really compelling. So tokenized real estate, tokenized venture funds are two of the maybe verticals that we're seeing a lot of activity in, as well as publicly traded companies like the biotech company we're working with that wanted to tokenize a particular drug.
Well, and there's always been this argument of you've got this huge company, let's just take IBM, for example, and they've got a very significant blockchain piece, but if you buy IBM, you may not benefit from their growth in blockchain because there's such an enormous business. But this is a way that you can benefit from one particular high growth area of a huge company.
That's right.
Yeah. So
it actually is a mini marketplace within, like in your example, because there'll be a bid and ask on the tokenized asset within that cancer drug of if you wanted to liquidate it and the other investors say, okay, you want to liquidate your share, your tokens, then I'm willing to pay this much. So it's like an auction market within an auction market, right?
That's right. I think within the industry, some of the most visible players are secondary trading venues that facilitate the listing and trading of these digital securities or security tokens. T0, who's a client and partner, is actually going live with their platform this week, which is big news. They've raised more than $134 million in their own security token offering in 2018. And there are others like them that are providing critical infrastructure that will allow for the secondary trading and liquidity in these deals. So there's a lot of focus and emphasis on those companies right now.
And I'm just thinking about millennials who, have graduated with a lot of student debt. Maybe they can't buy a home, but this is one way they can invest in real estate, for example, and benefit from any kind of upside valuation that would come with that. So, it really kind of addresses some of the issues that we're dealing with as a society in terms of income inequality and, people not being able to kind of move on with their lives and buy a home or so forth. So
that's right.
Yeah.
The difference is that whereas with crypto and ICOs, which certainly attracted a millennial movement in a lot of ways, a lot of investment from retail, the difference is this is a regulated market. And so it ultimately will be up to the issuer to determine what the mechanism is to offer that investment. If it's a Reg D private placement, then it's open to verified accredited or accredited investors. Whereas if it's a Reg A plus or a regulation crowdfunding Reg CF deal, that does allow anyone over 18 globally to legally invest in the deal. And so there's certainly a lot of interest in those particular exemptions in this market to allow retail investors to participate in regulated offerings.
So finally, how can somebody find out more about Issuance?
They can go to issuance.com to learn more about the company or connect with me on LinkedIn.
Okay, great. Thank you so much, Darren and Arthur,
Thanks,
for
Jen.
joining us. Very
Yes, Art.
interesting to kind of cover all these big changes
Thank
that
you
are
so
going
much.
on. So thank you.
Thank
And
you,
thank
Jen.
you as well for joining.